Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is August 14th, 2016 edition of Market Outlook. So 3 out of the 4 indices all hit new highs. This is the first time since 2000 or 1999 that this has occurred. That's a positive sign. Let's take a look at what we have in terms of the market internals and see what that's saying. So as you can see, this week, marginal new highs, up 0.35% in the diamonds, but this was pretty much enough to generate an all-time new high. Same thing with the S&P 500 and the same thing with the NASDAQ 100. What is lagging and not on all-time new highs is the Russell 2000. But nonetheless, the fact is that the diamonds, the spiders, and the NASDAQ all hitting new highs simultaneously is a positive sign. Let's take a look at some of the volume here and see what that's showing. Well, first of all, summer is a general, especially late summer, is a time where volume generally dries up, and you can see that's pretty much true. In fact, Russell's down 46% in terms of volume on Friday, S&P down 29%, although you had some pretty good volume in the NASDAQ 100 and the diamonds, but overall volume falling off. And you can see accumulation versus distribution. You've got some of the accumulation days dropping off over the last couple of weeks, so it looks a little bit more neutral. But again, I wouldn't read too much into the volume other than the fact that overall you have more accumulation days than distribution. It's overall a positive, light volume. I give this a neutral to a slight plus. And of course, overall market action, definitely a plus pretty much across the board. Okay, let's take a look at the sectors. A couple of interesting things have occurred within the sector and the rotation. Well, first of all, as you can see, utilities, right, which had been really leading, has now dropped off, right, and is back down. And actually now the worst 6-month performer, which is interesting. So big drop in utilities, which is a good sign. It was highly unusual that utilities was leading the rally up in stocks because that's usually a safe haven and a risk-off indicator. So unusual activity, now getting a bit more normal, risk on, definitely doing better overall. However, this week, you can see utilities were up 0.3%, with the market only up 0.2%, so the ratio declined fractionally. So when I say some of the risk-on indicators weakened, there's one of them, but it's really overall marginal. Again, semiconductors leading extremely strong. That's a positive sign. Something else that really picked up quite a bit this week was the retail sector. And you can see year to date, certainly not one of the outperformers. We really like to see the retail sector pick up. We did get a pop. If this continues, that's a really positive sign. So from a overall view of sector rotation, we say this is a positive net, right? Utilities still weaker than they have been, and semiconductors, energy, and retail picking up. Now, the other thing to note is all sectors are now positive on their 6-month returns. That is really a positive sign and well above the 200-day moving average and the 50-day moving average as well. You're in certainly a positive phase. That looks really strong. Okay, so now let's go to market hotspots, where we look at various segments of the market and different asset classes. So a couple things to note, right? This week, the hottest USO, 5-day change, 6.49%, considering the pressure that oil has been under. Good sign overall for the economy. This is an area where we definitely want to see a bit more strength, and we got it. So that's a good positive sign. The other thing is to note, Brazil net, although it was down on Friday, right? Its 5-day change still positive. So relative to the S&P that was up 0.2%, Brazil still gaining. That's a positive sign. That's overall emerging markets getting stronger. So that is looking pretty good. What is correcting is XME. That definitely had a rough week. Those are mostly industrial metals, some other precious metal companies involved there as well. But that was down 5% of the week on the week, and definitely a sign, potentially, since it includes some precious metals as well, a positive sign for the market. Okay, still XME, GDX, these are still by far commodities, still a leading asset class overall. All right, let's take a look at some of the market internals and see what they're telling us. All right, taking a look at advanced declines, up-down volume, McClellan oscillator. As you can see, and I had pointed out, we worked off overbought conditions in the market through time rather than price. It's a positive. So just looking at short-term up-down volume, even though we've declined a little bit here over the last week because of the weak and light volume, summer volume, not surprised to see this come off, but we're still over the midpoint. I give this overall a positive, right? We got overbought, got a bit of a sell signal for about a day or two, and moved back over the midpoint, puts us back into positive territory. Overall, I would call this a small positive. In terms of the McClellan oscillator, that looks at advanced declines over a 3 to 4 week period, marginally neutral to negative, right? We got overbought and, oversold here, and then attempted to take out the midpoint, which we've sort of stalled at. So I would give this a slight negative. And again, on the advanced decline on a shorter term basis, definitely more of a positive. We worked off the overbought situation through time, got through the midpoint and then back through it. We're sitting above it. I give that a minor positive. So not all that much convincing. I would call this minor positive for the S&P in terms of market internals. Let's take a look at the NASDAQ composite. Same exact scenario. And let me go through all the details here. Okay, first of all, what did we do? We certainly worked off overbought situation in terms of time rather than in price, and in fact, still continued to move up. So what we have is we got through the midpoint here. You generated a very, very short-term sell on that part of the indicator and came right back through it, negating the signal. Right now, we're sitting above the midpoint. I give this a small positive. On the McClellan oscillator that looks at advances decline over that 3 to 4 week period, we're sitting right at the midpoint. Not too much to read in. Again, we worked off that extreme overbought condition by going sideways to up, right, and through time, and then again, almost simultaneously generated a signal, which was good for about a day and a half, and moved back above it, and again, neutral. In terms of advanced declines on a shorter term basis, this is 10 days, a positive here. We're holding the midpoint. And again, you want to go back to this website and you can get these updates throughout the week. So I'm giving you the reading as of the close on Friday. So minor positive in terms of the NASDAQ composite, looking at the internal strength of the market, the breadth, up-down volume, advanced declines. So let's take a look at another way to look at market internals, and that is new high, new low ratio and we're sitting well above overbought levels. That is a real positive sign. You want to see it stay above there and not get below this 70% level. This is looking really positive on the S&P. And guess what? We got a similar scenario on the NASDAQ 100. Minor decline off of very overbought levels. You can see here on an absolute level, basically all new highs, very few new lows. That is a real positive sign. All right, let's go to the next chart, set of charts, which is all about sentiment. And as you can see, we just about touched down at the lower end of the Bollinger Band. That's to be expected as the market's sitting on new highs. So overall, 50-day moving average, 200-day moving average, well above where the VIX is trading. That is positive. And again, what we want to see for excessive optimism is a blowout beneath the lower Bollinger Band and then come back in. So all we have right now is the VIX indicator running in alignment with the S&P. So this is pretty normal action, and things can get pretty wrung out as the market chugs higher. This is pretty normal activity. What we want to see, again, is a blow-off and then a move back above that lower Bollinger Band once it's penetrated. So all we have here right now is a confirmation of the overall trend. I call this a big positive. And you have a similar scenario looking at the short-term volatility 1 month versus 3 month. So this is looking at VIX versus VXV, which is the 3-month volatility. And you can see sentiment pretty extreme to the upside, but until that extreme sentiment starts turning down and really getting below this 1.2 level, this level right here, let me show you. So when you go back to the charts here in Little Big View, you can see for yourself on an intra-week basis. What we really want to see is the market start turning down beneath this line here, which is the 1.2 level, and we're not even close. So overall, again, sentiment, although pretty frothy, not really turned down and giving you a negative indication that that has run its course. So overall, market internals, market sentiment running positive. Now, the key thing I want you to look at here that could change things is the 10-day moving average, which is this green line. Any close beneath that 10-day moving average would also take out the lows over the past 6 to 7 days. Those two coincident things could materialize into a significant sell-off. But meanwhile, you've got an inside day on Friday, and that is a real interesting setup because it gives you a low-cost entry. Certainly, if you're a short-term trader, you can get in, follow some upside action with a tight stop under that pattern of the last couple of days, which is an inside day type pattern. All right, well, I hope this helps. Again, overall position of the market, pretty positive. It's definitely risk on. However, we are running frothy, so we want to be cautious, certainly if the market takes out that 10-day moving average in the spiders. Okay, see you next week. And again, have a great rest of the summer.